Good afternoon. This is Ron Brown. I am doing this weekend report on the afternoon of September 23rd, 2022. It's been a brutal week in the market, and it's another brutal day today, but we'll take a look at that and see if we can find any hope at all in this market. I'll be using Think or Swim and HGSI, which gives us a unique look at what you can do in the markets as far as getting insight into strength and weakness. It's a brutal day, and I'm going to get to that in a minute. This is my standard risk disclaimer. Any stock, index, or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. If you want a trial of HGS Investor, just go to highgrowthstock.com and you can get a 30-day free trial without a credit card. So this is where we are right now. There's been a little buying in the last few minutes, but you can see it's been a very brutal day. NYSE advancers compared to decliners, minus 27.12, going down to the NASDAQ, minus 30.72. And there are only 240 advancers on the NYSE, 29.15 decliners as I'm doing this. On the NASDAQ, there are 598 advancers and 3,666 decliners. Looking up here, I'm going to click on the composite. This was down over 300 a few minutes ago, so maybe we will not test this June low. I thought maybe we would get there today, but it could certainly happen on Monday also. Let's go take a look at a 78-minute chart. You can see over the last 78 minutes right there, and here's the I'm sorry, this is a 5-minute chart. I didn't think that 78 was right. So over the last 5 minutes, here is what has happened. In the prior 5 minutes, here's the last 5 minutes, and then here we are right now. So we're seeing a little bit of buying going into the close. I'm going to go back to my 5-day 78-minute chart. You can see on this 78-minute bar, there is a hammer forming. It's going to take a lot of buying in this last hour to form a hammer on this daily chart, but we are seeing a little bit of buying now. That's all the time I want to spend in Think or Swim. I'm going to go into HGS Investor, and one thing that you can do if you use my market analysis user groups, if you go down here to the bottom, you'll see the top 100 stock holdings in ETF components or in the indexes, and these can be a proxy for the market, because if you look through here, you're going to see all of the familiar old line companies, and this is where a lot of the institutional investors put their money. So if you just are looking for a proxy, you can use this. Let me type in index and go down to the index. Now this particular one, out of all of the ETF components, these are the top 100 stocks that are most widely held in those ETFs. And if I bring this up and go into my HGSI index charts, and I'll just go down here to number 6, and I put a 6A in here also to get rid of the moving averages. But if you look at this, you can see that there was a sell signal right here after the buy signal. There was a buy signal here and then a reversal. This was just a counter trend rally that failed. Now what I'm going to do is I am going to pause the video and go up here into my broad market indices, because you can see that the top 100 holdings in the ETFs and in the indexes, the major indexes, are both in here. I want to rebuild these, So I'm just going to go to my Tools menu and select Rebuild Indexes in Groups, and I'll pause the video while this updates. Okay, that only took about 30 seconds. I'm going to transfer this to a warehouse view, and I'm going to quickly move into my top-down scorecard views for HGSI index analysis, because these indexes are built from stocks in the database. And I'll click on number 3, and if we look down these columns, I'll sort on raw combo first. You can see the advancers versus decliners, and the NASDAQ at 0.13 is not quite 10 to 1 negative, but just about. Anything below 0.10 is more than 10 to 1 negative, and you can see what's happening here. So let's seek out these two indexes. I'll just resort here. You can see that in the top 100 holdings in the ETFs, and these are the major companies, 99 of them are negative, and in the indexes, 98 of them are negative. So I'm just going to change. I'll use the ETFs. I'll change to the index groups, and then I'm going to go into my views. I'm moving quickly because I don't want to spend a lot of time on this. And if I go down to folder number 13, intraday market momentum, the stock that is up is Johnson & Johnson, and everything else is down. And like I said, these are all of the major names that institutions and hedge funds trade in. So this is folder number 13. Now let's just go drop down to the next one. Okay, there are 98 down, and the two that are up here, Johnson & Johnson and Old Dominion Freight Lines, not up by very much, so 2 cents and 9 cents. But this is a quick way to get a read on the market, and then of course if you use the Spectrum Analyzer, you can see which groups are getting hit hard. Now, some of these stocks are not down by very much, you can see looking down here, but others, if I resort this and go back to the top, some of them are down substantially. Conoco, Phillips, and Chevron. Oil prices have fallen dramatically today, and this is being reflected in these stocks. Now let me get away from this chart, and I'm just going to move down to some what I call my contextual charts, and let's look at the moving averages here. And you can see that the group exploration and production, what has happened over the past few days. This was the leading group. You can see that there is a gap down today on ConocoPhillips, and it's given up a fair amount. This is up around 118, and it's currently trading at around 100. So these groups rotate quickly, and HGSI is an excellent way to stay on top of what's happening. What's scary about a day like today, for those of you who want to go short, you're always afraid of a snapback reversal, and these columns right here, here is the days since the 3 crossed the 6. This tells you how old some of these signals are to the downside. Like Intel happened 24 days ago that it crossed to the downside. It went above it for a few days, and then, let me make sure this is it. Yeah, it went above it for a few days, and then the 3 crossed the 6. There it was already in a downtrend. That's an excellent shorting opportunity, or to buy a bearish put spread. Let's take a look at NVIDIA. Where did it cross down? Right here. The 3 never did get back above the 6. See how many days that was. 24 days ago. Eagle Pharmaceuticals. You can see it was positive here for a few days, and then the 3 crossed down below the 6, and it's been nothing but downhill ever since. Now these, like I said, these are all major stocks, and I imagine every one of them has options. Looking at this, you can see that only 3 stocks are above, the 3 is above the 6. And let's take a look at these, and that doesn't look like it's going anywhere. Nor does that one. It's in a range. Nor does that one. These are all in congestion areas. If you look, you can see Apple crossed down 2 days ago. Let's see what Apple's doing today. Here was a positive day, and then the crossover here on this reversal, and it's been going down. We are getting a VPA signal on here. No supply, a sign of strength. I'm going to quickly go back to the main chart. Well, we got this hammer on the 78-minute. Now it's going back down again. It's down 268 to 269 at this point, and there are about 40 minutes left in the market day, so we aren't getting much of a bounce at all. Another thing, or another group of securities, if you want to call them that, Bitcoin is not in good shape here. You can see that it's testing support area right here. So far support has held. This is yesterday, but if that breaks on volume, who knows where this is going to go. It's been a horrible investment after all of the hype we heard last year and this year. Here's crude light. You can see what's happened with crude. It broke support today on the Fibonacci, and there is a little bit of buying coming at the end of the day, but it's down $4.60 to $78.90. What hurts oil prices, I believe, is the strong dollar. Look at this dollar. It's just unbelievable. I'm sure this has something to do with what's going on in Ukraine, with Russia getting more aggressive, and traders look to the U.S. as a source of stability. The thing about the dollar is when it's this strong, it really hurts foreign buyers of U.S. products. So if you're traveling overseas, it's a good deal for you as a tourist, but it really hurts our domestic companies. And with the strong dollar, the oil prices continue to go down. Let me find that oil chart again. It's off the lows. Let's look at the 78-minute chart. You can see there are some brave souls here stepping up and buying oil right now. Okay, I'm going to go back to the holdings in the indexes, or I'll use the one with the ETFs. Really doesn't make much difference. They're pretty much interchangeable. There are a few differences, and I created these lists just by running the group inclusion report against all indexes and against all ETFs, and the stocks that appear most often are included in here. Let me see if I saved that report. Here it is. Okay, for example, if you run this against all of the ETFs, you can see all of the ETFs that are holding Meta platforms. 368 ETFs are holding Meta. Let's go down to the next one. The next one is Microsoft at 258. I'll do one more. Cisco at 234. Let's do one more. And Texas Instruments 234 also. Now, on the indexes, these are all of the indexes which hold these stocks. Amgen is in 12 different indexes. AXP is in 12, Intel's in 11, Meta's in 11, and Apple's in 10. So there's a huge difference, of course, on the number of ETFs that are holding these securities compared to the indexes. I want to do one more thing before I wind this down. It's short and to the point because there really isn't a lot to say. I mean, there's very little strength to talk about next week, or going into next week, but there's a tremendous amount of weakness. I'm going to hold my alternate key and space bar, change this from the top 100 holdings to all securities, and then I'm going to go back down here to my number 13 folder, and these are the HGS box stocks. Now if I click on this, you can see that there are 666 stocks in here. These are stocks that have shown some form of earnings growth from box 1 through box 10 stocks. And if I click on number 4, the number of stocks that are up out of those 600 plus stocks, there's only 11 stocks that are up today, and 4 of them are home builders. That's interesting. A couple of semiconductor manufacturing stocks, but when I go to the momentum down, there are 655 that are down. There may be some that are unchanged, but I'm just tracking the up and down, and you can see what these groups are. Might be better to look at major industries, oil and gas. With oil prices coming down, you can see that this is the dominant group. REITs are second, with rates going up. Transportation and logistics, semiconductors are getting hit hard for the most part. There are only 2 that were up, and that's one way to look at it. Sectors, you can also do the sectors, but a lot more information if you just do the industries or the major industries. So with the box stocks, let's go over here. I'll sort on this, and then I'm going to end this. These are all box 1 stocks all the way down here. These are stocks with the most consistent earnings growth over the past 5 years, and there are 159 of them. If I make a group by using Alt Group, I'll just call these box 1 stocks, and 159. And let's see, you can see there's not a single box 1 stock that is up, but there are 159 that are down. So earnings momentum, good solid companies, it means nothing in these groups. Now, I was going to stop, but I want to try something here. Let's go back down to the market analysis user groups, and I want to go to the top 100 in holdings in the ETF components, and you can see that 25 of these qualify as box stocks. You can see that they're in this column here. A lot of them are not real fast growing companies. You get down here in the 8, 9, 10 areas, they're just old name companies, but they still have earnings growth. And then if we see how many are up, none of them are up. So these screens can be applied to different folders, or you can do all securities. If you do all securities, it will go directly to the box stocks, which are refreshed every night during the fundamental process. One last quick look at the index, and then I'm going to, let's go over here to the comp. Well, we're getting a little bit of buying here. This is the 78-minute chart, so that's good. I'd hate to see it continue to go, but maybe we need a flush out bigger than this. We haven't seen a lot of fear yet based upon the VIX. The VIX has been pretty quiet. See if I have the VIX here. Well, it's spiking today, finally. But even with this sell-off, it was down here, in the 25, 28 range, and now it's spiked up to 32.29. And when you get that spike, then you'll see some buying, generally see some buying coming into the market. Comp's down 222 now, so quite a ways off of its low. Anyway, thank you for listening. I hope you're either in cash or short, just protecting yourself, because there will be many opportunities in the future once the Fed quits tightening, and there will be many opportunities to make money, and it should come relatively quickly. And with HGSI, we can certainly stay on top of where the movement is in the groups and indexes. Once again, thank you for